it's not for everyone. Most people don't want to have the roller coaster. Most people want that stretch thing. They want to put the money somewhere and get the 10% return, and that's it. Like they want exactly that, and they have it monthly income on all of those. They do not want the roller coaster, because 50% down is like a hit in the heart for them. They feel like the heart was ripped out and like thrown on the stone somewhere. And that's a realization I made with a lot of people in my closeness that I thought should be Bitcoiners, but they can't handle the volatility. It's sad to see, to be honest.
Well, yeah, in my opinion, you're right. I mean, the money flows is evidence that you're right with that thesis. And there's going to be people that literally do not want to buy Bitcoin because it's only 70,000. They want to buy Bitcoin when it's 1 million, when it's 10 million, because then it's the type of asset that they want to hold that has lower volatility and more sort of feeling of guaranteed double-digit returns, but not insane, right? Like that's when they actually will be attracted to Bitcoin with capital. And that's unfortunate because retail doesn't look at it that way. They just see it at being 70,000 and thinking, well, I can never own a Bitcoin, so I'm not going to look into it. Maybe I'll buy this or that or this, right? Because it's almost like the number bias, the unit bias that we have, or that retail has. Large money doesn't have that. They don't care what the unit costs. They just care about the returns and the risk profiles. That's not a metric. Like that's one of the first things you learn in investing is like the price. When I learned about investing, the share price doesn't matter. It doesn't matter if the share price is $10 or $100 or $1,000. It's actually about all the other metrics around it. The share price is just the current market price, what people are willing to pay for it based on the available shares and all of the other metrics. So I think other people will realize that later on as well with Bitcoin.
I see the price as just a reflection of the emotions, right? Like how people are feeling at that current time. When the price is trending down, it's just that people are fearful. They're worried. They're thinking it's going to go lower. When the price goes up, they're feeling like it's going to go much, much higher. So either way, like I feel like using the price to make your decisions on whether you buy Bitcoin is probably the worst thing you can do.
Yeah, I think you're right.
So true. Yeah, and it's, even just to get back to the stretch stuff here, and whatnot, I think I tangented us, which is my fault. That's usually what I'm good at. Again, it's a little bit of it's just being rich versus being wealthy. Like the Bitcoin is revolutionary in many senses of the word, and it's people that are just focused on the stocks or real estate. Some of us come from the real estate world, whatever business world, and that's a world where yes, you can get rich, but it's going to be harder to get wealthy. Wealthy is your time and energy. It's your freedom. And that's what the promise of Bitcoin is at the end of the day. Am I going to be governed by someone else, or am I not? Or am I going to have agency over my life? And that's really what I'm in it for at the end of the day. It's, I can make money anywhere. I mean, we can all go and we can have a job somewhere. We can start a business, done a lot of businesses. But I think the reason we're all here is because this is something different. It's a protocol outside the system that promises a different world, going from type 0 to type 1 Kardashev society. It's all part of this game and not being controlled by a bunch of cartels up above us. So the time will pass anyway. People talk about well, you got in earlier than I did, or et cetera. Like you guys just mentioned a minute ago. Well, today's the day. Like you can get in now. You still have the choice to get in now. I'm still buying. Everyone here is still buying. That should tell you all you need to know. We're still buying. If it was a Ponzi or some other ridiculous thing, then we wouldn't buy. We would just be sitting back and doing nothing. So the signal is in there, but it's for people that have ears to see in the eye, ears to hear and the eyes to see. Excuse me, but it's that's the thing people have to read. Read software. Just go in that thesis. That's what's playing out in the world, in my opinion. That something we can hit on later. Maybe that's what's playing out right now in real time. Is the software thesis, abstract power versus real power. But what do you guys think about Stretch? Again, we talked about this last week briefly, but I don't think everyone was here. What do you guys think about Stretch and just what Strategy is doing in terms of being top of the funnel, like bringing people actually to this protocol outside the system? Or is it just going to be, which is, everyone thinks it's just this asset inside the existing system? So I'd love, your guys' thoughts on that.
I was thinking about it today. I'm like, is this cheating? Like, is Strategy cheating the system here? That's what it seems like, because we all hate the banks because they have the ability to print money, And it seems like that's what strategy is literally doing right now. But then I was like, well, there's a couple different ways to get Bitcoin. You either have to mine it, or you have to add value to the world and contribute to it. And that's essentially what strategy has done here. They built a financial product to allow these big pools of capital to get exposure to Bitcoin, or I guess a pretty damn good return on that. So I guess when I think about it, my first thought is, yeah, this is bullshit that strategy's eating up all these Bitcoin. It doesn't seem fair. But like they built it. They created this product, and that's what they're benefiting from right now. It'd be the exact same thing if I had this, insane invention and I sold it to the market and I took all my proceeds and bought Bitcoin with that. Like, it's the exact same thing, I think. So it's clear that there is demand for this. And I think that this is going to be the first of many. And I fully agree with what Robin said there. I think that they're going to make movies about this stuff in the future because it's just that insane to me. So I don't know if I really answered the question there or not, but that's kind of where my thoughts are around the stretch thing. It's a lot. And I think by the time a lot of people catch on to what's happening, it's going to be, unfortunately, too late for them to get a real sizable stack. I still think that whatever you can get at this point is going to be more than enough if you can hang on to it for decades. But the people who are kind of dragging their feet right now are going to miss out on a lot of cheap Bitcoin.
Yeah.
Yeah. I mean, STRC is definitely top of funnel. And that's something I didn't mention in my video. My video that we referenced at the beginning of the chat is I try to find some criticisms of STRC and I compare it to altcoins and stuff with short-term time preference and that. But a lot of the pushback I've gotten in the comment section is people saying, STRC is 10% of my portfolio is for short-term capital. I have 15% in crypto ETFs and 15% in STRC. And I think it is sort of that introduction to people that barely know what Bitcoin is, see the returns and are just enticed by it. Like Misty, MSTY, which is like this covered call ETF that pays return of capital. I think it led a lot of people to MSTR and then that led a lot of people to Bitcoin. Unfortunately, it was designed in a way that just erodes capital the entire time. STRC is not that way. So people seeking these larger dividend style returns in the way they function, but it's actually return of capital. I think that's an entirely different there's crossover. There's Bitcoiners that want that too. But there's an entirely different subsection of investors that want those returns and will figure out if they'll have to look into STRC and therefore MSTR and therefore Bitcoin. And that just leads them to understanding this asset to some degree because of STRC. I think it's massive top of funnel to Bitcoin adoption, actually.
So, sorry, I just want to jump in here quick because there's somebody on Nostr, Sam Magner said, STRC is short-term cash for us, less than 5 years. Everything held longer is cold storage Bitcoin. Would you guys want to be outside of Bitcoin for 5 years? Like we just talked about the upside potential of, missing, what was it, Rajat? 10 days and 20 years if you're outside
10
of,
days.
Yeah.
10 days a year.
So like, is it worth it? I don't know.
No, that's another comparison that I made there is that when you trade shit coins, these altcoins and stuff, you end up with less Bitcoin on average. The vast majority of people doing that end up with less Bitcoin after they're done. STRC is the same. There's going to be a few people that are able to time it, get the short-term value out of STRC and get Bitcoin at a better price. But the vast majority of people doing that and trying to do that will end up with less Bitcoin because they bought STRC, in my opinion.
I think one of the what you were saying there, Jor, strategy is cheating. It does feel like it. It definitely does. But they're the ones who created the best savings product in the world.
Yeah.
And now they're funneling as much money into it as possible. And it's not like they're forcing people to do it. The world sees 11.5% interest, and they don't really care about the mechanism behind it. What they care about is, I would say a lot of the people who are buying STRC probably don't care about Bitcoin. They just see 11.5% interest paid monthly, looks great. And it's becoming more and more stable. Go ahead.
Yeah, I just wanted to add, I think there's a big cohort of STRC buyers also that love Bitcoin. They just want a better cash reserve. So they have maybe like 2% cash reserves, 5% cash reserve. And instead of like putting it into like money markets, like ETFs, or just like cold hard cash where they get like 1% or something like that, they're like, I love Bitcoin, and I want to keep my cash rather liquid in something that is low volatility and gives me, instead of 1%, 4%, or like just like 0.5% or 50 basis points, I get 11% for it. I think there's also this, like I see it more and more, especially like not being offensive, like a lot of boomer Bitcoiners I see on Bitcoin Twitter saying like, oh, I'll double down on my stretch position. I'm like, especially like the closer you are to retirement, the more stretch actually makes sense for you, I think.
It all depends on your time horizon. Yeah. If you have, let's say, a month to retirement and you don't plan to work after that, you probably want more stretch. But if you have, let's say, for example, all of us, I think we probably have 20 plus years to retirement, right? If you have 20 plus years, you don't want to have the majority of your portfolio in something like stretch. I think that would be a terrible decision.
Yeah. And part of it too, and you guys, someone just kind of mentioned this as well, but like everyone thinks they are Luke Gromen, where it's like, I'm doing this for 30 years. I'm a trader. Like that's my expertise. Like the promise of Bitcoin is that you don't have to play in that world. You can just focus on your craft. You can be, optometrist, you can be a lawyer, you can be, whatever, swinging hammers, whatever, plumber, and you can just save in Bitcoin over time. And I think, again, like you guys nailed it's the time horizon thing that really trips up most people. This goes back to, and we've talked about this before too, the memes in Bitcoin cut both ways. You got to be very careful with the memes, because the memes are great for normies. Like the general memes of Bitcoin are amazing for pre-coiners, no coiners, etc. But once you get into Bitcoin, then it can cut both ways. You have to be very careful, because you can get into this world of like, well, I'm never selling one of my sats ever. And it's like 10 years later and you're like, dude, you're worth, in USD, you're worth $15 million, bro. Like, what are you doing? Like, just spend a little bit. But like, people call into the Dave Ramsey show. I mean, Rajat, we've talked about this before. People call in the Dave Ramsey show and they like ask Dave like how to spend money, because they've held on so long, like Scrooge McDuck, they don't even know how to spend money. And I know, and that's one of the criticisms of Bitcoin. You hear a lot of people say like, well, yeah, you can't have this neutral money with deflationary, deflationary system. Like, it won't work. People won't spend their money. And again, like, people need to buy stuff in the world. Like, it will happen. But this is where just flexing that muscle, working that muscle of, hey, I'm going to save, I'm going to spend a little bit. I have to understand that I save more than I consume, but like you have to work both those muscles, build a circular economy. So it really is a time horizon thing at the end of the day. And like you guys said, short term, yeah, stretch. I mean, things like this are great for like these short term. I see people in the comments, like, for my bills or my checking account, whatever it is, where it's like, instead of that, I've got it in stretch, where it's maybe a shorter term thing, a liquid instrument where I can just get in and out, get some return. So it's very interesting.
One other thing here. We talked about STRC being limited by the amplification ratio. So if there's an environment where they can't issue more MSTR stock, then they can't issue more STRC. If they can't issue more STRC, then there's more demand for it than they can issue. The variable rate will go down. So I think we're starting to see, we kind of get locked into these things of thinking, okay, well, now for half a month, STRC is just printing cash and being able to buy tons and tons of Bitcoin more than ever. And that's going to be regular. But we don't really actually know what's going to be regular with this. I think that there's possibility, like if Bitcoin draws down a lot, MSTR draws down a lot, they're at a negative to their MNAV. Maybe they hit their amplification with STRC that they want to hit. I think, it's just something I was thinking of, is that this is going to be more unpredictable than people realize. And I think a lot of people are thinking STRC is the underlying bit of Bitcoin and just will be here now that it's established. And I don't know if that's true.
But what would be the situation where they can't issue MSTR, but they can issue, like if Stretch is so popular, wouldn't automatically be a lot of people also interested in MSTR common, and they always have some premium, so they can always kind of issue against that?
Yeah, that's what I was
think so.
That's what I was thinking too, because if STRC is up, it means that MicroStrategy can buy more Bitcoin, meaning they have more collateral, meaning they have more assets, meaning that the flywheel gets more powerful